Hi guys, welcome to the channel. My name is Tao and welcome to Taofi, where we talk about macroeconomics, trading, and investing. So for today's deep dive, we're going to talk about basically portfolio construction. I think some of you seen my previous video on my portfolio and my construction of that portfolio. What I wanted to do is give you guys an update today of how that previous portfolio has changed. I'll give you some of my philosophies for my portfolio construction, and then we'll take a deep dive into the current portfolio that I have right now. All right, so let's dive in. So I wanted to talk first about a couple of my philosophies for my portfolio and just in investing in general. So I think the most important thing about investing and trading is looking at time horizons. Specifically for me, the 1 week to 2 week trading time horizon is where I like to be most of the time. This is where most of my crypto trades, macro trades, options trade usually last between 1 to 2 weeks. There are some exceptions where some of them can last, 2 weeks, 3 weeks, 4 weeks even, but most of the times I like to stay within the 1 to 2 weeks for trading. And it also really depends on the macro regime as well too. So if we're on a trending regime, you probably want to trade less, but if we're in a choppy macro environment and a choppy trading tape, what you want to do is probably trade more and then, trade in between those ranges as well too. The other time horizon I have is 6 to 12 months. And this is, again, I classify this as trading as well too. Some of you might take this as investing, but I think for me, a lot of income generation comes within the 1 to 2 week trading. Really a lot more of, I would say 80% of the income that I have from my portfolio comes from the 6 to 12 month. Again, this is a really good blend between not too much management of the portfolio and positions, and then you get a really good return for the time and the money that you put into there. And again, I think my main focus and the bread and butter has been, and the most of the income has been in the trades that are 6 to 12 months long as well too. These can be crypto that I've been holding, and then also long-term dated options as well too that have gone pretty well. I think that buying options within the 6 to 12 month range as well too is a really good option. A lot of people don't do that, and I think a lot of people still gravitate to the very short dated and even zero DTE options. Not particularly my philosophy and how I go about things, but yeah, I do like to look at things from the 6 month plus. And then the last time horizon I want to talk about is the 5+ years. I think this is where most folks find most of their investing and goes into is the 5 year plus. A lot of the people buy and hold for the 5 year plus. A lot of my portfolio that falls into this is probably the art or NFT pieces. Those are probably for longer term investments. Some of you might have real estate in this bucket, and maybe your 401ks and everything else as well too. I think this is the 5+ year time horizon is really good for the folks who don't want to manage a lot and don't have a lot of time or have a day job or a family and basically just don't want to manage a lot of their positions, but still wanted to put money away in the market and to basically put off some of that spending so that you can have more purchasing power in the future. I think this is the time horizon that's really changed a lot for me anyways. I used to be in this 5+ year range in this cohort, but what I found out is that the 6 to 12 month time is the best time frame. I think that's just how the macro environment over the last couple of years have turned out to be. The buying and hold strategy has not been doing so well, and I've been taking a little bit more active approach to my portfolio. So I think there are some downsides now to this 5+ year horizon. I'm not going to be putting a lot of my portfolio towards that time horizon and really sticking to the 6 to 12 month plus. But then again, that really depends on your personal investing philosophy and where you are at in life. If you are younger, you're probably not even going to be worried too much about this 5 year plus. If you're like me in the middle of your life in your 30s, then it might be in the balance right in the middle. And then for those folks who are older, maybe this is where you're going to be wanting to put most of your money, since this is probably the least risky. So that's a little bit on time horizon. Again, this is going to vary from person to person, but just wanted to align you guys on my time horizons and how I look at the markets and investing and trading. The next thing I want to take a look at with you guys is liquidity. Liquidity has always been a big driver for me, for my philosophy. I like how I can easily move and access funds. I think the most liquid is liquid tokens or, major top 100 stocks. Those are very liquid. You can get in and out of those positions very, very easily. I think middling liquidity would be like your options or some of the things that are a little bit harder to sell. And then your really hard things to access for liquidity would be your home equity and real estate. Those are, much longer term investments, and maybe bonds and CDs as well too. They're not as liquid, but they do offer, less risk and a little bit more return. But for my philosophy anyways, liquidity has always been important to me because there's opportunities everywhere. And I think that when you don't have liquidity, what you're trading off is what we call opportunity cost. So that money or that liquidity could be doing something else instead of sitting in that asset that you have right now. For me, where I live, real estate is actually really expensive. And I think real estate, for my philosophy anyways, would be more of the wealth preservation piece. And then if you had access funds, that'd be great. I currently don't own any real estate, but maybe hopefully in the future. But again, I think real estate, back to the liquidity picture, is very illiquid. And I think that liquidity is a double-edged sword. So a lot of folks who maybe are bad at investing and trading and are really bad at spending probably want assets that aren't liquid, and so prevent them from using that money and accessing that money and spending that money too easily. For myself, I am very active in my investing and trading, and so I appreciate the liquidity and I need the liquidity. So again, this is going to be very specific as well too, but I wanted to kind of align you guys on my thinking just specifically about liquidity. The third thing I want to talk to you guys about is capital efficiency. So capital efficiency is what I call best bang for your buck. There's so many things and so many options that you could pick and choose and invest and put your money into. What I'd like to do is get the best of return for the capital. I think what comes with this is basically the risk. Obviously, the more capital efficient the investment is, probably the riskier it is. What really comes to mind when I think of capital efficiency is options. So options give you that leverage. They give you basically, for a very small sum of money and a small piece of capital, you can grow that account and make that account very large over time. There are, like I said, inherent risks with that. But again, you can mitigate some of the risks and work through some of the risks. So you can actually see this in action when we're going through our Robinhood account. So if you guys haven't seen the Robinhood account, take a look at some of my other videos and check out what we're doing for the Robinhood account. I think the Robinhood account is where capital efficiency is being highlighted to the extreme. We're starting off with a, not a huge account, but an account that we have a couple of $1,000 in there. And what we want to do is just use that account and make sure that the capital efficiency is working for us. Another way I think of capital efficiency is if you're trading and investing, you want to put it into the asset that is going to be the top performer. For the last couple of months, it's been AI tech stocks and then also crypto as well too. You could have easily invested in the S&P 500 and some of the Qs as well too. You would have had good gains, but I don't know if you would have had the best capital efficiency for your return. So for me anyways, capital efficiency is top of mind for me, and I like basically the best value for my money and the best bang for my buck, understanding some of those risks involved with that. And then lastly, for my investing portfolio and trading portfolio, what goals of mine are, I wanted to highlight here. About 50% of my goals is to really generate income. I'm at a point in my life where income generation is really important for me. I'm entering to the stage of my life. Most generations cohort spend the most amount of money because they're buying houses, starting families, and then investing in businesses and working through there. So for me right now, 50% of my goals has been to generate income. So that generation of income comes from basically my trading between the 1 to 2 weeks horizon and the 6 to 12 month horizon for my income generation as well too. And then about 30% of my goals is for wealth generation. So wealth generation, I would say, is to, generate this money and then keep it as well too. I think that's probably one of the most important things. And a lot of the lessons I've learned through trading and investing is how to keep my money. I've been very good at kind of the income generation, but I haven't been so good at the wealth generation piece, which is, generating that money and keeping it. And it's also in the wealth generation, I consider like self-improvement, taking classes, paying for subscriptions, and just kind of general self-help and self-improvement things as well too. I would bucket into the wealth generation piece. So a lot of my income and a lot of my goals for this investing and trading is to basically become wealthier life-wise and not just because of money. And then the last piece of my goals is the 20% is wealth preservation. I think wealth preservation is important for, I think it ties back to the wealth generation part, but I think this goes even a little bit deeper to kind of making sure that, you're not losing any money. And I think with wealth preservation, you really want to just beat inflation at minimum. So I think that wealth preservation is really important for, older folks and people later on in life. They've accumulated a lot of assets. They put in a lot of hard work and elbow grease into their career or their business. And so they want to preserve their wealth. And so, that's a little bit more important for those. But for me right now, again, like I mentioned, I want to live life. I want to be wealthy lifestyle wise. And then I want to keep generating income. Wealth preservation will probably tick up as I go up in my life, maybe in my 30s, I'm in my 40s and my 50s. I'll be more cognizant of the wealth preservation. So just saying, kind of give you guys a ballpark of what I'm trying to do with my investment and trading portfolio, just so you have an idea. Your goals and what you want to get out of trading and investing might be different from mine, but think about it in terms of, income generation, wealth preservation. Where are you? If I was a 18 to 25-year-old, your income generation will probably be maybe 60, 70, 80% of this goals equation. And then you're not really 10% of that is with wealth generation, and maybe I have 0 for wealth preservation, since maybe you haven't accumulated any wealth yet as well too. So I was there with my younger self, and again, I wasn't thinking about that. And then for the older folks, you might not care about income generation. You've already maybe experienced a lot in life, and so the goals of wealth generation, and you've already learned a lot in life, and right now you just really want to preserve your wealth, and you want to kind of spend more time with friends and family, and that's maybe the more important for you. So those are just a couple of my philosophies about trading and investing and how I take a look at my portfolio. I'll make sure to kind of add this or change things and put in other things that might be relevant as I kind of think about this. So with that in mind, let's dive over into the changes from our previous month's portfolio to this month's portfolio. So looking at February into March, I'll just highlight, some of the major changes that we saw in our portfolio and talk a little bit about them. I'll start with the biggest piece of the pie and then kind of work down from there. So for Bitcoin, our previous month, we were at about 50% here for Bitcoin. And I'll dive into the specifics of what we had in there. We did make some shifts away and diversified into another miner instead of just one miner. And then we took a little bit of the gains from the miners as well too, and then added it to MicroStrategy just to diversify and to decrease some of that risk from the miners as well too. For this month, BTC is only about 37% of my total portfolio. What happened here is that the miners really didn't do much this past month or so. They've been kind of flatlined, and they've been essentially haven't been moving much. I'll talk a little bit more about it when we dive into the specifics of the portfolio, but just kind of what my thesis about the miners are and what's kind of happening there. So at least for Bitcoin, we saw a little bit of a decrease in my allocation. And that's because the next thing I want to cover is our Solana allocation. So my Solana allocation is just fully invested into Solana tokens right now. And last month we were at 17.6%. This month we are almost at 30% of our portfolio. Solana had a very, very good month. I think this month it's been up over 50%. So I think from the previous, it was trading at $125, and we're almost at the $200 range now for Solana, and it's showing really good strength. Solana, and that's why you see for March right now, this month, it's been a bigger chunk of our portfolio, and that's just good. And then we'll see if we have to rebalance this and kind of work this out. But right now, I'm gonna leave the March portfolio and the 30% Solana alone. Solana, again, I'm going to be holding for another 6 to 12 months. So I think there's more appreciation on the road for Solana. Next thing on the list is Bitcoin NFTs, or what we call Ordinals. Back in February, it was about 2% of my portfolio, and now it's about double that at 4%. I've invested into Bitcoin Puppets, which is like the second largest or the third largest Bitcoin Ordinals project right now. It actually did 11x for me for that investment. I probably should have bought more of those Bitcoin Puppets, but I only bought one just because that's all the funds that I had at the time, and I really just didn't know too much about it. And we'll talk a little bit more when we do the deep dive. But that was a really good trade or investment right there with Bitcoin Puppets at 11x. That was a really good return, and so that's why it's about double the allocation for our portfolio now. Next up, last time we were at about 4.1% for our overall trading portfolio. For this month, we are at 4.9%. I did have a decent month, not like a crazy month, but we were able to make some gains in some of our trading accounts. So that added to our overall portfolio. And then again, what I really want to highlight with folks is a lot of traders and a lot of investors don't reveal how much they're trading. All you see is trade recommendations, and then also people suggesting making trades, but they never tell you like exactly how much of their portfolio they're actually putting for trading. Again, I want to be very transparent with you guys. I'm only really trading a very small percentage of my overall portfolio. I just think that as I'm trying to get better and better at my trading, this will probably grow and probably change, and this has changed over time. Previously, trading in 2022 and 2023 was much bigger. It was maybe 20 to 30 and up to 50% sometimes of my overall portfolio. That's just because we had a lot of ups and downs in the market in between those 2 years. And so that was more of a trading environment. I think it's been less of a trading environment since we've seen the S&P and the NASDAQ and also crypto take on really like parabolic runs. Especially when things go parabolic, I think that trading parabolic moves are not capital efficient. And it's just you add on a lot of risk, and you think jumping in and out of trades is better. But when things like Solana, Bitcoin, even the Qs are going parabolic, what you want to do is actually stay in those parabolic trends for as long as you can and limit trading. So again, we did pretty good, and I'll go into the specifics of what I do for and what kind of things I do for trading. But again, very small portion of my portfolio, and we did have some good trading this month, and so that's increased over last month's. The next thing I want to cover you guys with is just the ETH NFTs. Last month, it was about 8% of our portfolio, and this month it's about 4.6 or 5% of our portfolio. Ethereum NFTs right now have kind of been in a hole. They've been just not trading very well. A lot of the liquidity has been sucked out of the ETH NFT market, and they have switched over to right now meme coins. We'll cover this, and if you guys follow along, we'll try to cover a couple more meme coins in our technical analysis just to see if we can catch some of these trades. I've been doing a little bit more of these meme coin tradings in my short-term trading account on Coinbase. But again, I think a lot of the liquidity for ETH NFTs have been moved over to the Solana ecosystem and the meme coins on there. I think it's just kind of a rotation of capital. If some of you guys are interested in ETH NFTs, it's probably a good time to start getting your feet wet with them. Again, there's definitely good deals to be made in there, and yeah, still a lot of things, and still very bullish for ETH NFTs in the long run. And then the next thing I want to cover with is just Solana NFTs. Last month we were at 10.2%, and this month we are at 11.1%. NFTs for the most part, and specifically the Solana ecosystems, I use as a call option. So I'm currently invested in Mad Lads and then Claynosaurus in the Solana ecosystem. They actually haven't been doing well in terms of Solana NFTs, Solana derivative or just Solana funds. They haven't been making gains. They've only been gaining in nominal terms and in dollar terms, just because the value of Solana has been appreciating. And I think maybe, a lot of the NFTs, ETH, Bitcoin, I think it's more of a late cycle piece. They're slowly gaining their momentum, but the NFTs are probably going to be the last thing I'm going to be tapering off in my portfolio. So again, nothing to really note for Solana NFTs besides it's relatively flat as well too. They've only appreciated in dollar terms because Solana has increased. And then the last piece I wanted to cover with you guys is our equities position. So the equities position right now last month was about 8%, and it's about roughly the same at 8.3% for this month. The equities or the QQQs is currently my employer 401. And yeah, just about 8% of my portfolio is in the Qs, since I don't really have any other options in that account. And really the best option and the best thing to be allocated into that from that portfolio is just growth stocks for now. So that's a little bit of an update for you guys of our current portfolio, our previous portfolio and our current portfolio. So let's take a dive into what the nitty gritty and the specifics of the current portfolio as well too. So here I've broken down the current portfolio into, even more granular, and then we'll talk a little bit about the specifics of each one, and then basically just kind of give you an update in my thought process about our current portfolio right now. So in Bitcoin, again, I don't hold strictly Bitcoin. I could have easily probably switched over to the Bitcoin ETFs. I haven't done that yet, and I've still been using MicroStrategy as a 2x leverage play for Bitcoin. Right now, we took some gains out of the miners and put 5% of it into MicroStrategy. That's been a good trade so far, and we're up, I think, over like 50% on that trade, and that switched over to that as well too. 45% of my count of the Bitcoin holdings is actually in Riot, and then 50% of it is in CleanSpark. It was weighted a little bit more with Riot, but with that run up, we saw that CleanSpark was performing a little bit better, and so I just wanted to kind of de-risk it a little bit and split it out into two miners, and I saw that CleanSpark was just doing a little bit better in terms of price action wise. So within that 37.5%, we have 5% MicroStrategy, 45% Riot, and then 50% CleanSpark. And then the 4% allocation of our entire portfolio towards BTC NFTs or the Ordinals. I only own a couple of projects from there. 90% of that allocation is towards the single Bitcoin puppet that I've owned, that 11x. That one was a really good trade. I was listening to kind of FOMO Hour and listening to some of the folks who are really OSF and some of the other people who are really deep inside the NFT and Web3 space. They just gave some good recommendations. The other 10% is just really just generative art. Anytime I just kind of see art or hear art on Twitter or find pieces that I like, that it's generative art, I've just been kind of accumulating it and buying those. Those are relatively cheap. The piece that I bought was like $100, and now it's worth about like $600 for that piece. For the Solana NFTs, that is about 11% of our entire portfolio. Broke it down a little bit more granular. 90% of it is in Mad Lads, and then 10% of it in Cleanosaurus. Again, Mad Lads has been the top NFT project in Solana. My kind of thought process and my thinking behind that is I saw it with ETH NFTs, and a lot of folks kind of rotate over, and as the underlining, so Solana is appreciating, folks make a lot of money and they move some of those into trophy assets, and Mad Lads could be one of those trophy assets. What I've learned from NFTs is really the attention is towards the top 3 or 4 or 5 projects. A lot of the other projects, even though they're cheaper, they really don't draw that kind of attention, and they don't continue to appreciate and value like those top 1, 2, 3, or 4 or 5 projects. So if you guys are going to be diving into NFTs of any of these chains, I would probably stick to the top ones just because they're the safest. NFTs are already a riskier investment, so you probably want to put the money where the majority of the market already thinks the winners are. So next is about 4.6% of our portfolio is in ETH NFTs, and I've broken it down a little bit more as well too. About 10% of that portfolio is just generative art. I actually want to be growing this piece of the ETH NFTs even more. I really do like generative art, and I think that generative art is just a growing genre within the NFT space. It's been, I've actually been interested. I think long term, I really do want to become a generative art artist as well too, and generate some of this art and create some of this art. I don't know where it's going to lead, but about 10% of our allocation into ETH NFTs has been generative art, and looking to grow this piece. 30% of the allocation for ETH NFTs has just been general art. That's just like, some of your major artists like Xcopy, I think, has been a major player, and you hear Xcopy's name a lot. He was one of the first digital artists and NFT artists here, and I think that over time his art will appreciate over as well too. And then 60% of the ETH portfolio are specific projects. So Real Vision has a project, Porsche has a project, and then Artifact, who was also acquired and bought by Nike, has a project. My thinking and my thought process around this is that even though NFTs are projects, I think more and more of the traditional companies are going to be moving over to the Web3 space. I think right now with Raoul's thesis of how companies and stocks are barely beating inflation and the monetary debasement, I think the next couple of plays and how these companies are actually going to be growing is diving into the Web3 space, since a lot of it is just making digital things. Artifact is making like digital sneakers and digital collectibles, which don't cost a lot to manufacture, and you can make a lot of it as well too, but you can still add the scarcity limit by integrating into the Ethereum NFT and the non-fungible piece. So, my theory is that you want to kind of invest and work in portfolios and companies that have some kind of real world application right now. Real Vision, obviously, yes, everyone knows, is a big finance and media company right now. They've been really doing a lot of things in the Web3 space, so I've been really interested in their project. I'm also a big car guy as well too, and NFTs are really kind of a cultural mindset and a purchase for culture. And so Porsche has a big culture right now. It's not the most expensive, but I think that over time, and you got to give companies, and they're really kind of explore the space. So again, this is very speculative, but I think big brand names like Porsche will take their time, but they want to do this right, and they're going to kind of put their foot in and make Web3 their Web3 pie grow a little bigger, and then put more energy and effort into that. I think a lot of folks have seen the bear market, and so NFTs for most of these traditional companies are probably the riskiest parts of their business. And so during these bear markets, they're probably not doing much and not putting much. But in these bull markets, as crypto appreciates and people's interests are back, I think some of these companies will start doing more with their NFT projects. And, Artifact is in the similar mindset. Artifact, as I mentioned, was bought by Nike. And throughout the bear market, a lot of these NFT projects were struggling. And then a lot of these projects probably won't make it out. But for projects like Artifact, Nike has always been a cultural powerhouse. They were responsible for Michael Jordan and one of the biggest players in just sportswear and just making a big cultural stand. And so that's kind of my main thesis for Artifact and some of the things that they do. It's culture very strong, and I think through the bear market they were able to maybe withstand that and continue to have funding from Nike as a parent company as well too. So again, main thesis is kind of look and work with companies that have kind of a footprint and already a sustainable business model right now in the real world that's maybe going to be putting more time into their Web3 and NFT space as well too. And then the last thing I wanted to cover with you guys is just a breakdown of my trading. So about 50% of my trading account is with futures. So that's commodities. So I trade oil, I trade gold, I trade Bitcoin futures, and sometimes ETH futures as well too. Again, I personally like futures. It kind of adds to our capital efficiency model, and you get about 3x leverage with futures contracts as well too. And so yeah, I do kind of enjoy trading futures. They were really difficult to trade at first, but over the last 2 years or so, I've gotten better and better and gotten the hang of futures. Again, you really don't want to buy and hold futures for like 6 months. Really, they're really good for trading vehicles, and that's why I've kind of enjoyed, and that's why they're at 50% of my allocation. About 20% of our portfolio is in our Robinhood account, and that's really kind of trading options and then a couple of margin options as well too with the miners. If you guys haven't seen it, check out the videos. I'm going to be doing the Robinhood challenge again, where I'm going to be showing you guys the trading, the ups and downs of trading, and trying to grow this account with you guys as well too, and then showing all the pitfalls and then sharing all the victories with you guys as well too, as we kind of grow the Robinhood account out to see what we can do with this account. And then another 20% of it is with Coinbase. And this is really just trading crypto. This is really trading in that 1 to 2 week window. It's usually with whatever meme coins I can get on Coinbase, and then also some of the smaller altcoin plays as well too. And, as a US investor, we're a little bit limited. We don't have all these other different platforms. And so some of the other smaller memes we can't get, and we can't trade them yet. But what you can do is still trade Doge. You can still trade Bonk and some of the other meme coins as well too on Coinbase. And then the final piece is just the 10% is allocated to FX, which is foreign exchange trading. I use IG for my trading, and I've not put as much effort into FX, but I do want to use it as another diversifier for income. And so it's just another area for you to take a look at. Over the last month or so, FX hasn't really been busy. Volatility has been kind of muted with FX. I think a lot of the liquidity has been sloshing around with crypto and tech. And so that's a good thing when you're trading. You want to be in different markets, and you basically want to see and look for opportunities in some of these different sectors of the commodity. Like Robinhood, macro, and then also currencies as well too, foreign currencies. I think the biggest problem for traders is they try to trade one asset, and they also take a look at it, and when they're bored, they try to trade. So instead of doing that, now I take a look at different markets and then see where the opportunity is. And if the market is just not doing much and the volatility is down and there's not much price action, moving on to a different market that has a little bit more action into it. So I know that was a little bit of a longer video, but I hope you guys enjoyed the granular look into the portfolio. If you guys want to see what we do, and I'm going to try to update this probably once a month or so, and then some of the smaller changes, I'll let you guys know that as well too. But if you guys want to keep updated with the portfolio, get a look into my mindset and how I've been looking at my portfolio, like, subscribe. And then again, this is not investment advice. This is kind of really just a take and a look behind the curtains of what I'm doing and I'm trading and what I'm investing in for my portfolio. Please take this and kind of use it as kind of a piece of evidence, and then kind of adjust your portfolio and what you want to do and kind of your current thinking as well too. So hope you guys enjoyed the video. And if you guys want to see the small minor changes and more of the trading action, check out our macro daily, where every day I do news and then trade updates as well. So hope you guys have a good weekend, and I'll check you guys out next time on the next deep dive.